Hey everybody, Kyle Sasser here. Everyone's favorite time of the month is here. That's right, market statistics time. These statistics are for Hillsborough County for the month of February 2023. So you're probably asking yourself, if you've been watching these videos for a while, Kyle, why is your hair back in a bun? Well, I actually have a hair appointment scheduled for tomorrow. Hair was getting a little bit long, so just looking to get that touched up. You're probably also asking yourself, Kyle, it's March. Why are we looking at February numbers? And basically, I have put together these beautiful new reports, painstakingly compiled by myself, as well as my team members, because the statistics that we were getting from the state and the county were taking way too long to come in. Normally, I would not even get the first report until the 20th of the month. So now, with the way we do it, I actually have statistics in hand by the 5th. We generate the reports. They're available for download or email instantaneously there. Then I create this video report explaining the statistics and then released to you. So basically doing this has allowed us to get the jump on everybody else, basically. So instead of the statistics video coming out at the very end of the month, we can now usually have it out by maybe the 10th or 11th. We're definitely trying to get it out sooner. My ideal would be if we could get it out by the 7th of the month. That would be firing on all cylinders for sure. Still work in progress though. The other thing to know, and that you're probably curious about, is why we look at year over year instead of month to month. And the reason why is because the real estate market has a natural ebb and flow throughout the course of a year. There are certain months that just are always quiet, usually coinciding with the beginning of school or wintertime. So comparing month to month doesn't have a lot of value, although with where the market is going and what it's been doing the last few months, we are definitely paying attention to month-to-month statistics here at Ashler Home Team. So we normally look at month-to-month. So this month we're looking at February 2023 compared to February 2022. Obviously a lot of stuff has happened since then, and I will get to the explanation of all that stuff by the end of the video. Generally speaking, that's how we structure the real estate stats. There is a ton of terrible information out there currently regarding market stats. The dumbest one that I saw was from Bloomberg, believe it or not. And basically they were trying to paint this huge picture from statistics gathered in 2022, stating that, major market shift was happening, prices are skyrocketing, tons of institutional investor cash buyers. Anyone that pays attention to any of these statistics knows that that is wrong. Anybody that is trying to base 2023 pricing, strategy, purchasing requirements off of 2022 numbers is really doing themselves a disservice, and it's gonna have a bad time. So let's get into these stats. So these market statistics are for Hillsborough County, February 2023. And if you would like a copy of these beautiful market statistics, as I find the page that I should have had prepped, there's a link down below. Click the link, you can sign up, and I will email you a copy of these statistics. Total number of closed sales was down 24.0%, total of 1,179 closed sales. Total number of cash sales was down 40.7%, from 462 to 274. Median sales price and average sales price. So average sales price is when you add up like 10 houses and you divide it by 10. That is the average price. Everybody knows average. Median sales price is a little bit different. So median sales price is, let's say you have 60 homes that sold. The median is the point at which an equal number of homes sold for more and less. So it is more of a true, quote unquote, midpoint of the market. Median sales price in Hillsborough County has held pretty steady at $400,000 the last few months, like uncannily so. So much so that I actually doubted that I had the right statistics. So I quadrupled checked them for the last like 4 or 5 months just to make sure that we were close. This month, it is not $400,000. It is $399,990, which is weird. That's an increase of 2% compared to 2022. Average sales price is up 5.9%. Total of $496,688. I skipped most of these because they're just kind of like, boring stats. I mean, there's dollar volume here. Median percentage of original list price, though, is interesting. So this is whenever a house goes for sale, what percentage of that original asking price is the eventual sales price? For the longest time, that's been holding at 100%, 101%, but that's actually down 4.8%. Total of 95.2%. Median time to contract, which if you remember a few months ago was kind of my bellwether for how the market is doing overall so far as demand goes, that is up 471.4% from 7 days in February 2022 to 40 days in February 2023. New pending sales, again, that's one of those metrics that, we don't pay too much attention to, although a major swing there could indicate future trends. That's basically held steady. It was down 2.5%. Total number of new listings, which is of interest, was down 18.2% from 1,691 to 1,383. Active inventory, which is one of the big movers and shakers currently, is up 132.7% to 2,569. Foreclosures, so this one's fun because you might see some news stories on this because it's a bit of a doom and gloom number here. Number of foreclosures was up 250%, which sounds absolutely terrible until you realize that we went from 2 foreclosures in February 2022 to 7. So still not doing too bad there. Total number of short sales, though, is down 75% from 8 to 2. So still not a lot of craziness on the doom and gloom side of things. Now, I do like to look at the different price points because timing of sales and purchases differs a little bit from $400,000 homes to $1 million or more. It's not necessarily that the effort required to sell a $1 million house is different. It's primarily the buyer pool is a lot smaller for a $1 million house. You can also see on the chart here that we have a very clear, arch weighted to the higher price points here. Now, interestingly, most home price points, the number of sales has actually dropped, which is to be expected because demand has been so low. Our demand, which is number of closed sales, is down 24%. So, it's to be expected that most of the price points are also going to be low. Interestingly enough, though, $100,000 to $150,000 saw 23.1% more sales for a total of 16. Everything else was pretty much down, though. So, $200,000 to $250,000 was down 35.5%, total of 49. $250,000 to $300,000 was down 41.5% to a total of 86. $300,000 to $400,000 was down 22.5% for a total of 411. $400,000 to $600,000 was down 28.0%, total of 367. Now, we have a little bit of a curve here because $600,000 to $1 million and $1 million plus tells a little bit different story here. So $600,000 to $1 million was still down 6.5%. Total of 158, but 1 million or more was actually up 3.3%, total of 63. The thing with those two is a lot of previous months, this was much clearer because we had a clear break, especially when demand was holding or growing. Nowadays, though, with demand down, the overall trend is not as apparent. And that trend is that historically, compared to where most houses were priced, let's say 2, 3, 4 years ago, every house has slid up a price bracket or two. So you really only see that in the 600 to $1 million or 1 million plus currently. It's not necessarily that we've created a lot more $600,000 homes. It's just homes that were priced $400,000 to $500,000 2 to 3 years ago have slid up into that higher price point. Median time to contract is up across the board, with the exception of 50 to 100,000 for obvious reasons. There's just never too many of those around. Some hilarious numbers here, though. $300,000 to $400,000 is up 616.7%, total of 43 days. $400,000 to $600,000 is up 583%, total of 41 days. Once you get up to like 40, 45, 50, 60, now we're starting to get into neutral / buyer market. So things have started to shift. Be sure to stay tuned for the explanation of the overall trend here, because there is a critical thing that these stats are missing. Total number of new listings. I'm not going to read every one of these. They're basically down across the board with the exception of that 600 to a million and 1 million plus. There's a little bit of a shift because we have been holding steady on the number of new listings relatively compared to previous year. The fact that we have fewer now is of interest. I hesitate to call it a trend, but it is of note. But for example, $200,000 to $250,000 houses, there were 60.4% fewer homes that initially went up for sale, total of 36. 250 to 300,000 was down 33.1% for a total of 95. Getting to the positive side, 600 to a million was up 15%, total of 237. 1 million or more was up 9.8%, total of 112. We are still building inventory though, even though the total number of new listings is technically down, and that is a result of low demand. Total number of current inventory, which is basically last day of the month, we take a snapshot of the entire Hillsborough County market and we just see how much is in each various price point. Under 300,000, not as much movement. It's kind of all over the place, honestly. So like 150 to 200,000 held steady at 3.3%, total of 31, but 200 to 250,000 was down 34.4%, total of 42. Everything above that is up. So like 300 to 400,000, there was 174.3% more homes available in February 2023 compared to February 2022, total of 694. 600 to a million was up 178%, total of 476. And 1 million or more was up 84.3%, total of 328. And them's the stats. All right, so let's get into the nuts and bolts, the nitty gritty here of what does it all mean? We got a lot of stuff going on here. Overall, though, the picture I can paint is downward pressure. And that is simply a result of way more inventory for sale and fewer buyers. Although we did have a bit of a bump in the number of buyers in February, compared to 2022, still overwhelmingly a building and inventory market. I will keep an eye on those stats in subsequent months just to see if buyers coming back is the current trend. Things are basically bouncing around. Things are trying to get figured out. I'm sure you've probably been paying attention to the news, heard talk about interest rates and all this other stuff. A few things on interest rate. So the Fed recently just announced that they're probably going to go a little bit higher. Of course, that resulted in mortgage rates instantly going up a half percentage point or so. The last 7, 8, 9 months, it's basically been bouncing around in the sixes. We were, for a little bit of time, down in the 5%, but high fives to high sixes is where we've been hanging out at. I've seen a couple tick over in the 7%, but that's more the exception. But again, that's always in flux currently. Normally mortgage rates do not move nearly that much in short time. A lot of that is reactionary stuff from lenders trying to predict what the Fed and the market is going to do. Historically speaking, last 20 years, interest rates have bounced between 4% and high sixes. So we're still within range going back to the year 2000. If we are looking at very long time frames, there definitely has been times that were quite a bit, considerably higher on interest rates. Talk to somebody who bought a house in the late 70s or 80s, and they will talk to you about 10%, 11%, 12%, 15% interest rates. A little bit of a caveat on that, because I know there is a lot of real estate training going on about using that as leverage to get people to buy. The 15% interest rates were not buying $400,000 houses. They were buying like $40,000 houses. So, a little bit of context there matters. But the truth is 4% to 7%, is it as pretty as the 2 to 3% that we had? No, but 2% is the outlier, not 4, 5, or 6%. 4, 5, or 6% is where we have been for the last 22 years. The only reason we were down in low 3s and in the 2s is because of the pandemic and the powers that be trying to keep things afloat, which has got us the current inflationary rate, which is why things have reversed and why interest rates are so high now, because they're trying to put brakes on it. So 4, 5, 6 isn't terrible. It's doable. But that is one of the primary movers for bringing prices down because that has dropped demand. But same point in time, personally, my belief is that if you're looking to make a positive life change, or if you're looking to take a better job, making a positive improvement in your life, that is the right time to make a move. Because the alternative is you live someplace where you're going to be miserable and that you've already decided that there's a better place that you want to be. So execute and make the move to where you want to be. Interest rates will change. More than likely, they will go down at some point. So technically, yeah, you can refinance. There's other things you can do. We've been negotiating a ton of price reductions, seller concessions, repairs, you name it, just because there is not as many buyers. So we are able to ask for a lot more than we have for years, like 4 or 5 years. One thing that you can ask for is you can ask the seller to buy down your interest rate. And basically what that is seller comes up with money and that drops your interest rate for a year or two. If you happen to be selling another home to purchase a new home, you can put 30 or 40% down, and that will always drop your interest rate significantly below current rates. I just purchased a home in pretty much the peak of the market, and I was able to reduce my interest rate by, I think, 1.5 to 2% off of the going rate just by putting up a sizable down payment. Now, I know 100% that is not everyone's circumstance. I'm just saying that there are options out there. There's first-time buyer down payment assistance programs. There's a lot of options out there. So if you feel like you're on the fence for buying and you know that you're going to be happier somewhere else, just reach out. We'll talk about it. There's probably a solution to make it happen. On the seller side, that time to contract number is getting a little scary. We're definitely getting into buyer market territory, and I want to kind of explain one thing that these metrics are missing, and that is, yes, median and average sales price is still elevated compared to previous years. We're still up compared to January, February 2022, which is pretty good. You know, I mean, that was already well above previous highs, 2006. What these metrics are not telling you is that those pricing stats and the time to contract stats only apply to the houses that are actually selling. There are a lot of homes that are just not selling and they're sitting on the market. There's been price reductions. So those home prices, those time to contracts, those are not being accounted in these metrics. And that's why inventory is up so significantly. That's why we have so many more houses. I mean, yes, it is, well, it's a two-sided thing. So there's low buyer demand, which means there's a lot of inventory getting built. So there's a lot of stuff that's like 90, 100, 120, 130 days. And as those prices come down on those houses that have been on the market for so long and people start buying them, those numbers and those metrics are going to drop. Now, there are rare cases where there are multiple offers on houses. Honestly, a great home in a great location that's a great renovation at a great price, there's always going to be demand on that house. So in those cases, 2, 3, 4 offers is not unusual. If you have a house that's maybe off the beaten path a little bit, or has a couple sore spots with renovations and stuff, you could still sell that house for a great price, but it is going to take a while, and the overall market pressure is working against you on the sales. So if we're looking at the hump here, we're definitely down off the peak, but we're still, let's say this is the baseline. We're still pretty high up there. So if you've been thinking about selling, it's still an amazing time to, cash out, whatever you want to call it, realize your return on investment. Yes, it is not as bananas of a market as it was early 2022, but honestly, early 2022 is not sustainable. Like 7 days to contract and prices going up $30,000 a month, that is not sustainable in the least. So if you've been thinking about selling, reach out, because market's not working in your favor at all currently. Overall outlook, keep an eye on a few things here. So we're looking at demand. If demand comes back, prices are going to come come back. And quite frankly, there's still a lot of people that want to move, but they've taken a little bit of a breather to get things figured out. We have had a bump in buyer demand, which, as I mentioned previously, anecdotally in my business, I noticed, had a lot of buyers reach out, a lot of new buyers, a lot of first-time buyers actually, which is awesome to see. And it's nice to see that confirmed in the stats as well. Number of new listings is down, but we're still building inventory just because demand is so low. And interest rates are kind of that, depending upon what interest rates do, that can dictate the demand. So, because people are still a little skittish about purchasing currently. So if interest rates tick back down into the low 6s to 5s, we should see continued building demand. If they hang out high 6s or goes up into the 7, that's going to keep demand low, and prices should fall accordingly. So overall, the only market trend that I can tell you for certain is uncertainty. There's not a clear trend like there has been for the last 6, 7, 8 years. So a lot of people reaching, trying to figure stuff out. So if you see like some statistics reports or news stories that sound like bonkers, just know that a lot of the major organizations basically don't do any research on any of it. Some of the stuff that I've seen Redfin and Zillow put out the last year or so, absolutely terrible. So those are the market statistics for the month of February 2023. Hope you've enjoyed this video and explanation. If you have any thoughts, questions, concerns, please feel free to shoot me an email, kyle@ashlerre.com. There's also a link down below to contact, or you just throw a comment into the video. I try to do one of these every month. So you know what to do, you know what to click. You can also sign up on the website if you would like a copy of those beautiful reports mailed to you. My name is Kyle Sasser and would love to help you either find a home or sell your home. If you would like some assistance, you can book a call with me. Again, links down below. You can also go to ashlerre.com. We have copies of the statistics there. We have a link to the book a call section. You can also search for your home by neighborhood, school, a few other things there. I'd love to help you with any real estate question you have. Other than that, thank you so much for tuning in, and I'll talk to you soon.